All right, guys, today we're going to take a look at GameStop. The GME stock is actually looking pretty good when it comes to the chart. There could be some massive upside in the coming weeks. They're also going to do a stock split on the 22nd of this month. So I wanted to jump on, break down the fundamentals, and give you my thought if GameStop is a buy at these levels or if we should just be looking at a swing trade. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, guys, we are going to talk about GameStop. Everybody knows this meme stock. It went absolutely insane on a big short squeeze a couple of years back, and surprisingly has continued to fare pretty well in the recent market conditions. You've got all the hodlers and the NFT warriors that continue to keep this thing propped up. I wanted to talk about the GME stock today because of the chart, guys. It is implying pretty tremendous upside over the next couple of weeks if what is happening on the chart actually plays out. So in today's video, we're going to take a look at the GME stock. I'm going to give you my thoughts on the fundamentals, if it's a good long-term fundamental play that we should hold in our portfolio, or if we should completely avoid it in that right and just focus on the chart, and if it's a potential swing trade where you should enter, take profit, and put your stop loss. Real quick, guys, before we get started, subscribe to the channel if you're new around here and you want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups and day one squad. I love you so much. Thank you for your support. But let's get started, guys. First thing we're going to take a look at. So this is the income statement for GME stock. Guys, like I said, I want to look at GameStop's fundamentals just real quick. We're not going to spend a lot of time on it because I'll get straight to the point. They're not very good. If you take a look here at the revenue, guys, I mean, declining revenue ever since clear back here in like 2015, 2016, right? I mean, they were doing right around 9 billion in 2014 to 2016. Then in 2017, they fell all the way down to just under 8 billion. And then they went back to 8.5 billion in 2018, but it's been all downhill since then, guys. 8.2, 6.4, 5 billion, 6 billion, and then 6.1 billion. So they are up a little bit in their trailing 12 months, but nonetheless, guys, still massively declining revenue. We want to see it going up over, the last 5 years. So we want to see 5-year revenue growth in excess of at least 10%, depending on the company. When it comes to the actual net income, guys, same thing, right? They were positive when it came to net income back in 2014, all the way to 2018. It was, somewhat flat or declining, but ever since 2019, it has gone straight down, guys. Negative 673 in 2019, negative 470, negative 215, negative 381, and negative 472. So it might have looked like they were starting to, shorten those losses or narrow those losses back in 2019 to 2021. But overall, guys, they're back to 472 million in the negative in their trailing 12 months. Like I said in the intro, guys, they are going to be doing a stock split on the 22nd of June or July. Yeah, so in a couple of days. I don't know how that's going to affect the stock, but I wanted to throw that out there, something to keep in mind. Guys, take a look down here at the balance sheet. So obviously right off the bat, right, no revenue growth, net income in the negative, and continuously widening. When it comes to the balance sheet, total current assets, 2.3 billion, total current liabilities, 1.1 billion. So not a bad looking balance sheet. They definitely have enough cash on hand or enough assets, right, that they can handle all of those liabilities. And so they might not be in super imminent danger for, bankruptcy, but the balance sheet is nothing that we should like anchor our portfolio on, right? We've got to have all of these other metrics that fall into place, not just a good, debt to liability ratio or asset to liability ratio. When it comes to the shares outstanding, guys, take a look here. So we were actually buying back shares. I shouldn't say we. GME stock was buying back shares from 2013 all the way until 2021, guys. They went from 117.8 million all the way down to about 65.4 million in 2021. They did issue a little bit of shares in 2022 so far. They went from 65.4 to 76 million. Now they're down 75.7. Definitely something to keep an eye on, guys. If they continue to issue shares, right, while the stock price is high and elevated, that's a big issue. like I said, they are doing the stock split, so it's something you want to kind of keep an eye on. A lot of people kind of have a misconception of what a stock split is. Guys, yes, the price comes down, but it's because, you know, they triple, quadruple the shares in most instances. The market cap stays the same, which is what you want to look at when it comes to the price you are paying for a company. So the balance sheet overall, guys, not bad. Definitely the best thing when it comes to the actual fundamentals. When it comes to valuation metrics, we'll, you know, jump over there in just a second, but look at these free cash flow numbers, guys, way in the negative and continuously widening in the negative. So they are losing a ton of money on free cash flow. I mean, they're running at almost a $760 million burn rate on their free cash flow in their trailing 12 months. I don't know if that's any acquisitions or anything that's in there, guys. You'd have to go do that research. But for me, when I look at a stock like this and I don't see anything that I look for within the income statement, and then I come over to the free cash flow and it's just looking like this, I don't even spend my time to research any further to find out why it's so far in the negative. It's just not a fundamental play for me. I know most people, all of the apes, right? They are straight short squeeze play. That's why they buy it and hold it. To me, doesn't make sense. I mean, everybody talked about how AMC was going to, you know, $100,000 a share. Absolute lunacy, guys. You don't buy stocks with that type of mentality or you're going to lose your money. Now, when we break down the chart, that's a completely different thing, right? But we'll take a look at that. Valuation metrics, guys. I mean, just look at this. No PE, because obviously they have no net income. When it comes to price to free cash flow, no price to free cash flow. They've got no free cash flow. It's in the negative. Price to sales in their trailing 12 months, 1.74. Their forward 1.66 when the industry standard is under 1. So guys, this is not a good price to pay for this company, right? It would need to fall exponentially for me to even consider buying it. Like it would need to fall exponentially. So let's jump over and take a look at the chart, guys. When it comes to fundamentals, I'm not interested. It's not a company I would ever put in my long-term dollar cost average portfolio. The fundamentals aren't there. However, look at this chart, guys. This is really, really nice looking, especially when you start looking at a lot of the other, you know, stock charts that have just been pulverized over the last, you know, 4 to 6 months. However, GME stock, guys, the chart is looking really good, right? We've got a big bullish harmonic, Bartley, kind of Gartley, right? It's got the 61% retracement on your X to A on your B point. And then you've got the lower high on C, and then you've got your X to A to D at around almost an 886. So the BAT goes to the 886 at the pattern completion zone, the Gartley at the 786. So you're a little deep for a Gartley, so you call it kind of like a Bartley. Then we had what? A type 1 reaction, and now we've got that type 1 return, and we're headed for that type 2 reversal. So guys, this is where you want to buy these big bullish harmonics. After a massive run up, right, the big short squeeze pulls back, makes a higher low than the previous low, and then runs again. And look at where it came back to, guys. It came back at an inflection zone, which was a initial high from clear back here in December of 2007. We caught a reaction, pulled back, made a slightly higher low, and now we're sitting right there back testing the 200-day moving average for like the third time, and then we gapped over it today. Look at this. Not once, twice, 3 times. Pull back, back test the demand line, and then run again, right, guys? Or the supply line, excuse me, as a demand line, and then runs, gets rejected, and then gaps over it. So guys, it's not what happens. It's all about the follow through. We got to see what happens. It just made a crucial development by getting over that 200-day moving average and also getting that relative strength index in the bullish control zone. It's currently sitting at 61.7. So 60 to 70 is that bullish control zone on your daily RSI or weekly RSI or whatever, just your RSI, right? And I've got that illustrated here with the green line. But take a look, guys. You're starting to build fresh positive momentum. You had hidden bullish divergence on your first low to your second low. So you had a slightly higher low on price and a lower low on your oscillators, implying a continuation to the upside. Guys, look at what happens historically anytime it gets above that 148, you know, to 159 level, really kind of like 150 to 160 level. straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. So you get back above that, guys, and you back test it successfully with breaking the 200-day moving average, getting back above the inflection zone, back testing that, supply line as a demand line, also with hidden bullish divergence and your oscillators both looking in the right direction, you could see some serious upside. I mean, you get back above that level, you back test it as support, you do something like this. I mean, I'll see you at, at least 246 at least, and then most likely 348, right? So if this is going to play out like it's showing, you're headed to much higher prices, where it's kind of tough to take the trade right now, right, guys? Obviously, gapping over that 200-day moving average is exactly what we want to see, but it's not what happens. It's the follow through, because let's just say it does get rejected here like it did, back on the 14th. I mean, you're likely headed back down to $65, 76, $65, which is that, that low from the pattern completion zone, and, some levels from back here historically, like December 7th. So you got to be careful, guys. You can't take it here, especially after testing it so many times. You've got to wait until it gets back above it, shows a back test at a critical level, and then create some type of bullish indicator, right? Bullish, engulfing candle or whatever. But for me, it would be good enough if you could just get back above it and then back test it. I think you have a much more, upside than downside, because at that point, you could set your stop loss just marginally under the inflection zone and, take the trade from, 159 all the way up to 246. And that would be your profit target, right? After that, you take profit here. Your next target would be the top of the structure at A. Unfortunately, you didn't get in down here, right? So your first target would be, up here at the B point. So you'd take profit right here at the bottom of the inflection zone, second, and then third. What I would do, though, if I was going to take the trade here, guys, if it gets above it, I would take half my position off here at 246 and the rest off at 348 while moving my stop loss incrementally as it rises, right? So we'll just have to wait and see what happens. But really, though, guys, this chart looks very, very good. I mean, most assets are not right here in the bullish control zone. They're not building fresh positive momentum. I mean, you've got bullish convergence on both your oscillators. On the daily, if you jump over to the weekly, same type of stuff, guys. Take a look. I mean, you're building fresh positive momentum. You tried to build negative momentum back here in the middle of May, couldn't do it. You've got just a beautiful bullish engulfing candle with like a hammer, then a doji, and you're just kind of sitting there floating with that inflection zone. You're just kind of, you're absorbing all of that remaining supply, right? As long as you can overtake that supply, you should head to way higher prices. Every week for the last couple of weeks, you've closed higher than the last. So guys, this is big, right? As long as it's not just absorbing all of the remaining demand and the supply is going to overtake and it's going to dump, you're in good shape. But we'll just have to wait and see. Look at the weekly, though, guys, making higher lows on your relative strength index. Just got back above neutral, headed to higher levels. If you take a look at the monthly, guys, look at this. Look at what it did on the monthly RSI, guys. Back tested that 50 neutral level, not once, but twice, and is headed back to that bullish control zone. So keep an eye on it, guys. This is beautiful. You're losing negative momentum. You haven't seen positive momentum on this asset since December 1st of 2021 on the monthly. You're over the 200-day moving average on the monthly. You're over the 200 moving average on the weekly. So, and you just got back above the 200-day moving average on the daily. So very nice to see, guys. Let me know what you think down in the comments. If, you've got a position on this, I'd love to hear it. If you like my analysis of the chart, I'd love to hear that as well. And if you're holding it for the long term, let me know why. I would love to know why in the comments. Come join us at the Patreon if you want to get all of our trade setups, guys. This video is for entertainment purposes only, not a licensed stockbroker. Always do your own research and due diligence, and I'll see you guys in the next one. Peace.